Yo. All right, good morning, everybody. This is Kel right now at the moment, and this is 8:35 a.m. We're going to start our morning MAO. Right, good morning to all of you. Now, morning MAO stands for Market Analysis and Outlook, right? So I'm very sure that our all of you guys know it, but of course today we have a few more new students coming in. All right, congratulations, you have made the right decision. Like, guys, let's welcome the GM11 new members, okay? Let's just welcome them with lots of love, okay? Shall we do that? Okay, so everybody, if you like to welcome the GM11 new student, let's give them all the love. Right, and give it to them as well, right? Come on, guys, follow me, right? Give me all the love and all the welcome the new GM11 people. Welcome to our TWB family. Yay. Okay, welcome. Yes, indeed. Let's welcome them. All right, they have made the right decision. Okay, cool. Thank you guys for all the love and messages. Thank you. All right, so let us begin our morning MAO. Let me put my screen and we will start very soon. Okay. Today got loads of information, loads of market analysis. Oh my God, today is really so much. Okay, so I try to finish it ASAP so that I can rush back to my other stuff because I need to go to the doctor later on. Okay, guys, good morning to you. 1st of March 2021, Monday. All right, Federal Checkmate is the caption for this morning. All right, Bill Ackman bets in. All right, so this one is two different caption for today itself. Okay, so we'll talk about this very shortly. So this is a very interesting cartoon, all right? Can you see that? I'm at the mercy of the Organization of the Lemon Exporting Countries. Now, what I'm trying to say is this, okay? This young boy basically itself, right, have increased his lemonade cost from 50 cents to $1 to $2, all right? End of the day is this, a little bit, okay, does cause a problem. In this case itself, right? If the interest rate around the whole world all just have to increase at the same time, so obviously, it's right. The manufacturers, the exporters, they will definitely put the cost onto the consumer. And obviously, between the pipeline, between the manufacturer to the final consumer, there could be many hands. So if everybody adds something along the way, and if someone exploit this in between, then definitely prices will go much higher than you can imagine. All right. So that's the reason why I'm sharing with you that this is going to come because, as I said, once the interest rates start to go higher, things will really develop. All right. So this is my point of sharing this. So today, this morning motivational quote says, don't think about saving money. Think about making more money. I think this is a very powerful quote. If you are a fan of Robert Kiyosaki, all right, the author who wrote The Rich Dad Poor Dad, I think it's very clear. I mean, of course, saving money is relatively important because you need that money to start off something, right? But the thing is, if your money is really limited or not that much because of your current monthly earnings, all right, then you have to really think, how do you use this money to make it grow? Now, it is possible. Everybody has 24 hours, but not everybody use the 24 hours for the right thing, all right? Or at least what I consider as the one that can multiply on its own. So that is why you guys come on board in Trade with the Boys to actually learn how to utilize this money to make it better, right? So that is the reason why I want you guys to reconsider and watch what I said during my last preview on Saturday. How do you use the 5% rule to make money from the financial market? If you want something cool, go earn it. Indeed, if you want something like your car, or you want something like your motorbike, or you want a new house, or you want something that is going to be important to you, all right, in your own respect, all right, then go for it, earn it. But not to earn it in the right way, of course. Don't earn it in the wrong way, okay? Earn it in the right way. I'm sure you guys can make it. All right. Now, this morning itself, I pull you guys onto the morning MAO is because I got someone to introduce to you. How many of you can recognize this person? If you can recognize this person, please key the person's name into the group chat right now. Okay, there's no prize for this, but this is what I'll ask you guys. How many of you recognize this person? If you recognize this person, now key her name into the group chat. Okay, if you recognize her, please key her name into the group chat. All right, this is taken like many some time ago. All right, this person, anybody, you recognize this person? All right, anybody can recognize this person? I'm still waiting for your name. Still no one? Still no name? All right. Okay, someone say Susan. Oh, why you all have a question mark at the back? Okay, guys. Okay, let's take a look here as well. Yes, indeed. This is me, Ben, and Susan. Look at Ben. Last time so bubbly, the hair more now, lesser now. I'm still the same fat Cal, and that is Susan a few years ago. Okay. All right, Susan. Today is her birthday, 1st of March, 2021. Today is Susan's birthday. All right, Susan. Okay, now this is like we celebrated her birthday back in 2014. That is about 7 years ago. So I know Susan way back. So for me, it's all right. Susan has been a wonderful friend, very loyal, so loyal that really, I cannot imagine that a person like her exists. Of course, end of the day, it's all right. Some of you say that, Kel, you always scold her. But the thing is, I scold her because for her good, because she's a very, very innocent person. All right, guys, so good this morning. Please, come on, guys. Wish her happy birthday. Wish her all the best. I want you guys to flood entire this Facebook group right now, flood with all the well wishes. I'm recording this, by the way. I'll give it to her and as a birthday present. I think this is the best birthday present you can give to a lady who have done so much sacrifices. She has done so much for all of us here. I'm sure some of us got angry with her at some time back then because of unhappiness moment. But now the thing is this, now you can see that she is really a real person, very innocent, very good, right? So give her all the love. Come on, guys. I'm recording this right now. Give her the best birthday present she can ever want for her life, that is for now, okay? So let's give her all the best wishes, wish her all the best, and may all the good stuff bestow on her forever and ever, all right? This is always something that I really want you guys to do, because to me, birthday is so important. Now, if Susan, you're watching this as well, do yourself a favor too, all right? Do remember this, give a call to your mom and tell her that, thank her for all the hardship that she has done for you and brought you into this world, and love her, all right? This is very important. Like all the friends around me, remember this, birthday, we can celebrate, we can party, but always remember this, call your parents, especially your mom, to tell her how much you love her, because that is how much love she put in to have you into this world. Of course, do love your dad too. Your dad is the one that makes you here, all right? So also do that as well, all right? That also carry a very important part in your life too. Okay, guys? Wish all the best. Okay, I'm going to stop here, right? You can put forever MAO. All right, thank you so much. All right, good morning to you, Susan. Happy birthday. And once again, we wish you all the best, okay? Cool. Okay. All right, so that is our Susan birthday gift, okay, as early as this morning at 8:40 a.m. Okay. All right, so let's just continue our morning MAO right now. Again, same thing, guys. Whatever I share in the market, please do your own due diligence. Nothing is 100%. Everything need to have you need to do your own current risk assessment and then do your financial conditioning, all right? If you're not able to do it, please don't force yourself, because anything can happen. Nothing is 100%, okay? This is very, very important. Okay, so why do I say checkmate for this Jerome Powell, all right? Now, if actually you Google this, if you actually Google this and you actually, Google Federal Checkmate, you actually come down to this thing here. Apparently, it's not the first time this checkmate was used on the Federal Reserve. And if you pay attention to the year and month that this particular articles came out, right, you will see that, right, those are the period whereby the market was near the brim of a market sell-off. Like 2004, there's one in May. Then in 2020, October, obviously, we know what happened in 2020 later on. Then after that, it's this happening on the 14th of November, just a month later before the market hit the peak. So actually, this checkmate thing is it's always about inflation, because Federal Reserve is about that, right? So now the thing is this, will the inflationary problem continue and causes Federal Reserve to be in a checkmate position, right? In my personal opinion, the answer is a yes. So of course, again, different people have different views. So today I'm going to share with you now. But in case you want to know why this morning the Dow gap up, right? It's because the House have passes the 1.9 trillion COVID relief bill. Yeah, passes it. And most likely itself, right? The Senate will also likely pass it. Now, the thing is this, of course, we know the Senate itself that some people are not happy with the $15 minimum wage. But the thing is this, based on what I've been seeing in the US market for a longer while, even they don't pass this round, they'll find a way to motivate you to pass the next round. So it's just a matter of time you're going to pass. So I'd rather play the devil advocate now by saying that they will pass, because the chance of they passing it is going to be absolutely high. All right. So the thing is this, you can see on the how it went past is then 219 versus 212 basically it's party line votes, meaning the party members stay on and vote for it. And of course, we all know that the current now the House of Republicans, there are more people there, so that's why. But of course, interestingly, 2 Democrats join over and to oppose it, okay. But still, in the Senate later, it's all right. This Vice President Kamala will definitely exercise her power, and she'll come in to do some sharing. And of course, you're going to make sure, because she said we will not rest until we have the $15 minimum wages. All right. So that's what she says. So watch out for that. Likely itself, right? It will be the pushing, I think, will be Thursday, if I'm not wrong. If I'm wrong, please correct me, okay? So Warren Buffett came in and said that never bet against America. Now, if you actually Google this, I have no time for this morning. If you actually bet on, key this word, never bet against America. He said this back in 2010, right? Whereby the market was coming off and he said that, and obviously the market went higher. So the question is this, whenever Warren Buffett says this, it seems to be in history, the market always will go higher. So undeniable is that, right? When Warren Buffett says this, he's telling the short sellers, come on, man, don't come near to our house. Do not go and give us trouble and stuff like that. So in his brief, he's mentioned this in his brief, American's brief, 232 years of existence, there has been no incubator for unleashing human potential like America. Okay, so in short itself, we said that, right, there is intermittent sell-off, but you can never write off America, because apparently it's all right. America has one of the greatest all the assets in the country. All right, basically, right, this is a very big country. So the thing is this, all right, the bond market, yes, indeed itself is not that fantastic and it has a bleak future. I'll cover that shortly. But his point is this, the environment right now itself, right, is still not worth it to bet against America. So that is why, again, that gave a lot of confidence to the investors right now. So the Oracle of Omaha says that, right, in his annual meeting, he says that, right, Berkshire have bought in back $9 billion worth of their own stock. Okay, that means the entire year itself, they bought in as much as total 24.7 billion. Okay, so that is a lot of shares bought back for their own. So apparently he also took in to buy in Chevron, he buy in Verizon, and also did a lot of other stuff. Okay, but still, end of the day, even though the buying back and all the acquisition, they still have $138 billion in cash. That's a lot of money. So take my little friendly advice. If ever, for whatever reason, that it's going to be any sell-off in the stock market, and if this man is still around, okay, if he is still around, I'm very sure he will utilize this $138 billion to buy big time again into the stock market. So I cannot deny this, all right? In the long haul itself, right? If there's no big problem, fine. If there's a big issue in America, whatever reason itself, right, the market can cascade all it wants, but once it hit a bottom, I strongly believe that the stock market will recover even stronger, and we can even see 35,000 or even 40,000 later on. So you heard me very clearly, all right? So this is something that he said, and he wants to look into the market. So he's very clear of his current position right now, okay? So what is the 10-year yields now? A lot of you guys have been watching the videos around the market, and you can, you heard this. Let me just tell you now, this is what happened to the 10-year yield now. It went from 0.9% to 1.4%, high of 1.6%. Okay, 1.6 actually the high. Not too sure why it isn't registered here, but doesn't matter. So just to let you understand this, is that when the bond prices come down, the yields goes up. It's like a seesaw right there. So when the bond price comes down, it's because people unload the bond prices. Why people unload bond prices? Because they don't want to hold bonds. They felt that the bond market now is not, the yield is not anything attractive enough. So they'll take profit from the bond market, take the money to put somewhere else. Okay, so obviously traditionally people take from bond market to buy into equities, but the problem is the equity now market is so high now, it doesn't make any sense. So the question is where the money goes. So in short itself, right, the longer duration bonds will be more sensitive to the rate, right? Because now they're paying at 1.4%, 1.8%, 2.2% rate. So of course, if interest rates have to go even higher itself, right, definitely the people holding the people itself, right, the yield will also be moving at the same time. So that is how it goes in terms of bond prices, okay, yields and bonds and stuff like that. Okay, so you can actually go online and read through this quite a bit of thing, but just remember this: whenever bond prices come down itself, equals the yield goes up, and if it just goes up, meaning the market is looking at a higher interest rate environment in the coming time. So definitely it's all right. Let's take a look at the bond price right now. Let me just see whether I can get it for you. The latest bond prices. Okay, now the latest bond prices is still going down. Okay, you can see right now on your screen. Now is coming, the yield price have came down to 1.97. Now the thing is this, you say, hey, then isn't that good itself? Because it's like now the yield is coming off, right? So there should be no worry. Well, if you say from to now at this moment, the answer is a yes. But if you're actually looking for the long haul, the answer is a no. Well, why do I say that? Because you look at the last 3 months, this is how the yield from January went all the way to the current price right now. So it's been always like this. And every time when the market found a base, certain where, and then to move higher, right, the stock market get a knee jerk. And of course, each time the knee jerk, it's getting higher. So this is something a concern. Now, why is the yield coming down even though the inflation is ongoing? That one, I'll cover it very shortly. Because people like them are saying that, right, the bond market is radically oversold. Okay, they're saying that, okay, this is too much. This selling of the bonds is too much. So there should be a pullback very soon. And this guy covered himself, David Rosenberg. He says that, right, he don't rule out 2%, but it's a technical overshoot. Okay, 2% in a move in 10 year is about 3% plus in 2018, and this is something to buy. Oh no, this is something that I have to agree with him. Now, if let's say he's saying that the 2% move in 10 year is about 3% in 2018. So basically telling you that, right, if you are okay to buy into the market to pay you a 3% rate, then of course it makes sense to buy because it's a fixed and guaranteed. All right, it's much even better than you put your money into all the fixed deposit with the banks. So he's saying that, right, although this is going to expect inflation, and he do see some stock market jittery, but still, right, he still think that, right, the bond prices at the moment now is a little bit overshoot. So at the moment, he's negative on big techs and mega cap growth stocks, all right? But again, as he mentioned again, he says that, right, this bond market movement now is a little bit overshoot. So he do expect to watch out for that. All right, and he also was actually also a bearish trader, investors. So then just take note of that. All right, so what is the rationale reason why we are seeing this yield coming off is because the central banks are fighting against it, obviously. You see, the problem is this. Central bank, their job and role is to make sure that the whole equilibrium is there. So suddenly when the bond prices have to come down so fast, that means people are getting away from the bond market, right? Meaning money is being redeemed from the market. So from the government especially. So people got freaked out. Hey, what's happening? Why are you taking money away? I don't mind taking your money because I need to spend it for something else. So when suddenly this happened, it's all right. The Bank of Australia, Korea, ECB, German, all came in and then do something with their yield. So there is some form of manipulation right now to ensure that this thing don't get overdone. Because if you get overdone itself, right, this could become a problem. But I'm going to say this upfront as a personal advice. Whenever such thing happen, when there is a coordinate movement together, right, there's two sides of the coin. One side of it is that the central bank will win, definitely for sure, right? Central bank will always win, all right? But if let's say, if you bring back to 1992, when Soros basically whacked down the pound, then you also know that, right, the central bank went against him and all the speculators. And this time around, it's not only against pound, it's global. At the same time, all the yields went up. So this is a concerning factor itself. If there is going to be a point whereby you're going to fight each other, this could be the problem here, okay? This could be the catalyst, or we call it in Chinese, the 导火线. All right, so this is something very, very important. So watch this carefully. It may cause a mayhem. All right, it may cause a mayhem here. So traders, you need to be very careful and watch this. If they can subdue it, no problem. The stock market will recover. But if the market, if the yields go up again, that means that whatever they try, they are pouring money down the drain. Okay, so be careful on this. This is going to be very scary, and that's the reason why, like this person, you do see this guy last time, right, on CNBC, Arthur Cashin. All right, he is saying that, right, this stock market pain may continue if the Federal Reserve lose control of the bond market. So when they lose control, meaning, right, they try to do any form of manipulation to bring down the current sell-off in the bond market. But if the market still want to sell and keep on selling, right, this will have a very big spillover effect, because that will cause the interest rate, the short-term interest rate worries. And when that happens itself, whatever they have been doing could be really going down the drain. So he's saying that there'll be more volatility in the coming week. And he said that the NASDAQ, the 13,000 is a key resistance. This morning, we saw the NASDAQ going above 13,000. So it seems to be okay. He says that, right, you say that now at the moment, now it's a washout. If you go down and punches below the 13,000 psychological level, right, you need to put on a seatbelt. That's what he says. Now for me, this guy relatively okay in terms of his market view. Not too bad, 60-40, 60 to 60% accurate. So I will buy whatever he say. So just take note of that. So the interest rate environment itself is still going to be testing the market, because now there's a problem here. The better the economy is doing, the more concern that the inflation will build up. And if more inflation build up itself, obviously that will cause the yields to go higher and basically dampen the stock market. So this is the problem right now. Now, if the economy is doing well, it's also a problem. And obviously it should be doing well, because economy is always 6 months before stock market. So now if stock market itself is near or at the brim at a high level, then now the economy start to recover and commodity prices start to go higher. This is going to tell you a lot of stuff. So watch out for Thursday, as Jerome Powell will speak again. Now, the last time when Jerome Powell speaks, the yield came down and then the stock market recovered. So let's hope that Thursday it will happen. But if the market doesn't like what he say, or the market just basically don't care, or then that Thursday also will be a very scary day for traders. So watch for this coming Thursday. This Thursday is obviously, you know what day is that? It's a 4th of March, okay? 4th of March. And 4th of March happened to be a very interesting day, okay? 4th of March, very interesting day. I will share more of 4th of March tomorrow during the Super Tuesday MAO, okay? So watch out for that, okay? All right, at the moment now, we are very sure that the Federal Reserve is pretty dovish right now. Dovish means they want to maintain easy policy and want to keep interest rate low. I mean, what they want is what they prefer. But can the market actually do that? That's another thing itself, okay? But don't worry, guys, in case you're going to go into panic mode itself, right? Do note once again, at the moment right now, right, for March, apparently based on the statistics, March have been a pretty good month for the bulls. It is a fourth best month in terms of average price change. Okay, so it's a fourth best in frequency of advancement, yet it's a fourth lowest in terms of volatility. Oh, okay, so a bit confusing right now, right? So what are you trying to say? It says that, right, overall March usually very nicely go up, very little crazy pullback. Yes, but now we have this interest rate environment, so you guys make your own decision, okay? So just take note of that. This is something to take note of. Since World War II until now, right, the average gain in March is 1.1%. Hey, that's pretty good, right? But in the 14 months itself, right, when stocks are lower in January but high in February, the S&P actually go up. So it's a bit like telling you, as long that if there's a recovery from January to February, usually March will be a better month. So overall, it seems to be they're just covering up and say that, right, March should still be good. So you guys make the decision. I will let you follow the chart, okay? Oh my God, Bitcoin has fallen again. All right, Bitcoin retreated from the record high to the lowest level in 20 days. Now, Bitcoin was at 55,000. I told you guys, a lot of people ask me can buy Bitcoin or not. And I keep on reiterating the point that don't buy Bitcoin at that moment at 55,000. A friend of mine wanted to go all into Bitcoin. So I told my friend of mine, I said, don't do that. This is going to be absolutely not to do that. You want to buy Bitcoin maybe at 40,000 and 35,000, maybe when it's off quite a fair bit. 15%, 20%, then you want to really join in the fund for trading purposes, that's fine. If not itself, go to do what I'm doing, we are doing right now is every single day, do the Bitcoin in out through the 5-minute chart, all right? We've been showing you that it works and it's been working pretty fine. So that will be the best way to do that. So the sell-off apparently echoed the equity market. I told you guys, equity market once come down itself, right? Whatever you can tell me, whatever you say about what they call hedging against the market, equity market, I tell you this all BS, because we have seen this before. Once equity market comes down, right, people will sell off anything from gold to silver to Bitcoin. This has been proven, and I've been saying that, and it has been mentioned, okay? So this one tell you that, right, when flight to safety mode is on, it is the riskier investment that get the first pull out. So it's always like that. So guys, this is why I'm not that keen to do any long-term position right now for all these three markets for time being. Okay. Now apparently it's all right. I saw this article on some YouTuber. Then I went to Google. I couldn't find this until I went specific on certain words, and then I found this. So apparently it's all right. Okay. Apparently usually when Bill Ackman come in and talk, right, the market will react lah. But this time round it's all right. They hardly talk about it too much. Okay, so anyway, this is being done 5-6 days ago. I just want to reiterate this, let you know. Bill Ackman bets on interest rate crashing the market. So this one is done on 24th February, a few days ago already. Not considered new news, but I just want to reiterate some of his views he said back then. So he says actually in his rights, he's the 9th highest performing fund manager in 2020. So he did a very good job last year. He made as much as $2.6 billion in 2020, all right? So of course he was also wrong when he bet against the counter itself. Herbalife, yes, again Herbalife, where he lost it he lost money, all right? So he's saying that, right, the current spike in inflation is going to be continuing, and he has bought instrument that pay off a large way in event of surprising move in rates. So obviously it's the option market. So he says that, right, the continuation of the inflation could spell more pain for investors in those companies like what? All those tech companies that have basically borrowed money to do their business. So this is something that he said. Then of course, if you trust what he say, you can continue to do that. Okay, you can continue. So the third thing is this: even Jim Cramer is getting a bit concerned. That is a pretty surprising. Even Jim Cramer is concerned to. Sorry, give me a short moment. Ben just text me. Okay. All right. So Jim Cramer is saying that, right, the February jobs could trigger a tsunami of selling. Now, he said February job means what? The non-farm payroll this Friday. Now, this Friday, we have non-farm payroll. So if the non-farm payroll is any stronger than expectation, the market may take it as a good environment. So again, the yields will go higher. And if that really happens itself, oh no, the stock market will get hit again. So traders, just be very careful. This coming Friday, non-farm payroll will be very critical. And in order to make sure that is right, I may consider to do a non-farm payroll night event this Friday. Okay, that means that I may consider that the first there'll be a non-farm Friday night event whereby we will do live showing of the non-farm payroll numbers. Okay, this coming Friday. I'll give you more details as the day goes by. Okay, so watch out for this. All right, this coming Friday, non-farm payroll. Of course, Wednesday you have the ADP numbers. All right, so that is the private sector. Okay, guys, thank you so much. So watch out for this. This is going to be interesting. All right, now thank you guys for the strong support for our preview last Saturday. We received about 143 people registering for it itself. About 105 people or 108 people came online. That's fantastic. So thank you guys for it. And we have quite a good handful of people joining us. There's still a lot of people still waiting and see at the side of the fence, but doesn't matter. End of the day, we really appreciate your help here. When you promote to people tell, in fact, as a matter of fact itself, right? On Sunday, I received a message from a friend of mine. He's not our community. He's a good friend. He told me, like, Kel, wow, what a good job for the preview. Your word is spreading out about your 5% rule, things like that. So I felt happy, and I feel that, right, we can actually get more out of this. So guys, if you have not watched what I say on last Saturday about the 5% rule, it's available on our YouTube channel. If you are, if you don't want to go to a Facebook group, you go to a YouTube channel and watch it. Okay, so it is the 27th February, the 5% rule sharing. All right, so you can actually watch the first half an hour or so to get the idea of the 5% rule. I will extrapolate the sharing again and put into our revision group so that you can actually just focus on that. Okay, so guys, we are very professional. We are doing, and we really want you to benefit out of this as well. Okay. So let's look at Dow Jones last Friday. The Dow Jones basically came all the way down. It tried to recover during the day, but it was flushed down to the last half an hour or so. Probably a worry that the House doesn't pass the bill, but of course they passed it. Now the Dow has recovered to where it came back from. But the problem is this: now we are in a checkmate position whereby if the economy is doing well, problem. If the economy not doing well, also a problem. Okay, so that's why I say it's a very checkmate position for Federal. It's really in what I say in Chinese, 进退两难. Really, both sides also have problem. So let's look at what happened on the US Dow Jones. It basically lost 460 points, and basically, right, it could be worse. But the NASDAQ saved the day, and the NASDAQ recovered from the low end to close positive because the yield came off. So obviously there was some manipulation on yield, and you saw earlier, and that propelled the tech goes higher. So the thing is this is very concerning. So the yields and the tax have very direct relationship right now, for now. So if the yield suddenly come off, if the yield go up again, right, then the tech will come down very fast. So this one you have to be very worried already. Watch out for that. So that's why when the personal consumption expenditure price index, right, got indicated subdued inflation, that means that it came out lower, the market also came off. So that's become the problem. As I tell you this, higher or lower, the market want to come off. That's why I'm saying that be very, very careful. So the last number was 1.6, the market got spooked. So now it's 1.49. If the market can go back to 1.6, the market will shake again. So traders watch this very closely, okay? Because now the market is worried about the credit spreads between in the market, and if the credit spread start to widen, right, obviously there'll be more and more concern. Okay, so the taper tantrum is something that I mentioned last week, and simply is being repeated again in the market. So traders just watch out for, and of course the 10-year yields also put the S&P 500 dividend yield lower, because now it causes the market to think that, right, it's much riskier to put into the fixed payment premium over bond market. Okay. So what's happening right now, you can see that futures have recovered a bit, okay, because of the bill, and the market is now concluding that there will be a bit of rockiness in the coming week. So traders this week will be very concerning. Watch out for that, okay? Traders, this is very, very important. So let's take a look at this a recap of last Friday, okay? The last Friday, when the market opens below the P2, I already tell you guys the Dow most likely will sell. Now, we have said this many times. When the market is below OP and below P2, it's always a sell. I said this many, many times. As long as the market below OP, all the CCYR will be a sell on the 15-minute chart. All right, the only thing is that the KSI was green in color. So if the KSI is green, when the market go to KTR -1 to -3, it will be a good time to look out for buying if the market actually do a CCRY with a trigger. So this is what I said. I will not change. You can see what happened. So from the very start of the day, the market did try to go above the KTR +1. That was a pretty good sign initially. But after that, it's now when the market goes below OP, that was where things go wrong. You can see that once the market went below OP, that was where it went wrong. So once you go below OP, the market started to come down very, very fast. But you can see the moment you go to KTR -3, that is where the market basically supported. You can see almost every time when the market go to KTR +-3, the market got supported. So this tells you that, right, when your KSI is with you, if you really want to pick bottom, go for KTR -1 to -3, especially -3. Definitely there'll be a best time to buy if you really want to buy into the market when the market is coming off, when the KSI is green in color. So this is going to be very, very important thing that you have to always remember. Okay, guys? So that is very cool, right? For this Dow Jones as of Friday. So remember this, when the market is below OP, always, and below P2, always concentrate on CCYR. It always will benefit you, okay? This is something I've said this thousands of times already. Okay, all right. Okay, so that is the Dow Jones recap, and we're going to go right now to our market. Let's take a look now. Okay, we're going to go to Dow Jones very shortly. Give me a moment. Now we go to Hang Seng first. Usually you guys want to do Hang Seng trading, right? Okay, just give me a moment. Let me just settle some screenshots. Okay, done. Okay, look at the Hang Seng first. Okay, do Hang Seng first. Now this is the Hang Seng chart. Okay, Hang Seng that last Friday gap down, and I do expect the gap up this morning. Okay, I do expect it. So the gap up, the MLP today will be roughly here. MLP for today would be roughly about 29,220, around there. This is the MLP for the Hang Seng later. The Hang Seng MA30 for today is 29,747. Now, someone asked me this question itself, right, Kel? When the market open, right, obviously the MA30 will also shift. And as the market moves, the MA30 also will shift a little bit. Is that correct? Yes, it will shift accordingly. That's why we do not really want to use the ongoing MA number to actually see the market. All right, but undeniable in a live situation, when the market hit the MA30, it does have reaction. So usually the best way to do MA30, so-called the MA30 deducement, right, is actually do it right now, unless there's a very big gap in the market. If not itself, right, this number 29474 will be a better number than you actually see during the day, because it will move along the day. Okay, you understand? Okay, so this is what I'm looking now. Hang Seng itself, right, the gap, there's some gap over here. So if the Hang Seng come down later on, if it come down, there will be a gap somewhere around here. This gap is about 28, okay, 28,750 region. So this one is a gap there. So watch out for that. Okay. So Hang Seng MLP, I already tell you, is about 29,220, not drawn to scale, do your own calculation. And then the MA30 is 29,747, so it's below MA. So do note again the rule that I said before. If the market is below MA, doesn't mean the market must come down. If it stays above OP, the market may do a recovery. So watch the OP closely before you get yourself into it and say that market must come off. Okay. So watch the opening price. That is very important. Okay, so that is the Hang Seng. Hang Seng will open in about 3 more minutes of some time. I go to Dow first, okay? So this is the Dow chart right now. The Dow chart is interesting. Well, a lot of lines there. So let me just see whether I get it correct. Okay, the purple line is the BMB. So I'm not going to change this. So apparently today, if I put the MA together, I realize that the purple line and my MA30 is the same figure. It's about the same figure. So that means that there's a strong resistance or pivot point at 31,282 level. So if let's say the Dow Jones can recover past 31,282, the Dow may actually go higher. But if the market touches this 31,282 and pull back, then the selling will be even greater than what you can see. So watch out for this 31,282 today. At the moment now, Dow is trading higher, as I told you guys, because the bill has went through. So let's look at the house, see whether it go through with that. The MLP, hold on. The MLP, I bring it down here now. The MLP is somewhere around here, right? Let me just take away this. The MLP is somewhere about 31,107 level. So now the Dow is above MLP. So that's why the buoyancy towards upside now is still there. But if the market pulls below the MLP, then traders, you have to be very careful, because that means the market cannot go past the midpoint of what happened on last Friday. So I suspect that today there will be some technical rebound. After 2 days of big sell-off, that's always very normal on a Monday morning to have some recovery. And it's very, very easy for the boys to do any form of market manipulation this morning. All right. Always seem to be like that. Okay, Hang Seng is going to open in about 1 minute time. Still got a bit of time. So this is my Dow Jones chart that I showed you last time, and I've been showing this. And it seemed to be, moving accordingly, resisted at the trend line. So if the Dow Jones do pull back and break this long-term trend line, then there will be a very big concern. But at the moment now, it's still intact. So there's no concern at this moment. But if the Dow really pulls back below this line, then craziness, it may actually formulate something like this. Okay, I hope that it doesn't happen like this way. But if it happens, watch out for, as I said, 30th of April. This could be a very interesting turning point in the market. So 30th of April, watch out for this itself. All right, this is something that I can share with you, but you know, let the market decide lah. We don't do go right in and say that it's for sure. Okay. All right, Hang Seng is going to open right now. Hang Seng. Let's do it. Okay, Hang Seng. Okay, Hang Seng is going to open up very, very shortly now. Hang Seng gap up 29,380 is a gap up of about 200 points. All right, for Hang Seng. Okay, gap up of 200 points. So Hang Seng right now, but it's still below the cage support level. So traders just watch out for that. Hang Seng is still below the support level here. And yesterday, Friday, KSI is red in color. So the market will be more towards sell than buy. All right. So if the market go to KTR +1 to KTR +3, then look out for CCYR. There could be some form of selling. Now, of course, there are some news saying that, right, the recent stamp duty doesn't really hurt the economy, shouldn't hit the stock market. Okay, we will just buy whatever they say lah, because this is a very official thing that they mentioned. So for us, MLP for today, the MLP level for the Hang Seng, let me just bring it to you right now, not drawn to scale again, just roughly there, it's about 29,222 level. Okay, so of course not exactly there. If the Hang Seng stays above 29,222, Hang Seng should be going up again. But if Hang Seng stays below 29,222, then there might be some selling. Okay, with the KSI rate in color, it's all right. I cannot deny this. This market likely may go into some profit taking mode once it have opened. Okay, so watch out for that, traders. But again, please pay close attention onto the 10-year yield. That one is more important. Okay, manipulation can pull the market down, but it will not hold it too long if the market don't accept it. Okay. All right, since we're on technical ground, let's continue on the technical side. For the long-term chart for us, it's all right. All looks okay for the Dow, so there's still no concern at the moment. All looks still okay. No need to ring the bell, but of course, you can see there's a lot of very key divergence now. Divergence means that when the market is going up, usually the indicator follow, right? But you can see now the RSI is going down, but the price is going up. So on the long haul scale, this is divergence. When there's a divergence in the market, there's two sides of the coin. Some say that it may go even higher. So that's why we saw 32,000 being traded. But now 32,000 was traded and the market pulled back by 900 points. So likely the market is going to say that it will test down again. So I repeat myself again, 30,133 is the 95 percentile level, or the 5% from the high. I strongly think that if, let's say, if the Dow Jones do break 31,000, I repeat myself, if the Dow Jones do break below 31,000, I suspect that the Dow will go down to 30,133. So my personal take, 31,000 has to give way first, because that is a psychological level, and it also is a milestone figure. So if the market loses 31,000, then likely the market may actually go lower. Okay, all right. So until then we see. All right, still a bit early to call now. Okay, all right, let's continue. Weekly chart. All right, weekly chart is ugly. I repeat, weekly chart is ugly, because the weekly chart itself, you can see very clearly is a reversal candle, and of course is a BNB at the same time. So having a BNB at the same time, meaning, right, that BNB, we meant that the boys are in. So unless the market can strongly go above the MLP of this weekly chart itself, if not, traders must be very careful. My personal take on this, because when you see a BNB, last time we saw a BNB, the Dow went up, right? Last time we saw a BNB on the market, the Dow went up. Can you see that? Yeah. The last time when you see a BNB over here, the market went up. So now it's a BNB from the top. And I always tell you, this BNB means the boys are in. So if the boys choose to go down, the market will come off. So watch out for it. At the moment now, the market stay above OP. That's fine. We can stick with it on the upside. But if the market breaks OP of the weekly chart, right, which is this market, then you have to be very, very careful already. Okay. All right. Let's look at the Hang Seng right now. The Hang Seng is still fidgeting between that, no much big movement. All right, because probably going to be jittery also. Do note again, this is non-farm payroll week. The market may go slow because everybody will be watching this. So traders, you can just go slow your trading. Don't need to put in too big of a position right now. Okay. Now for Dow Jones today is actually a pretty positive day. Why would I say that, right? Now macro picture is macro picture. Okay, the one I show you is all conventional charting. But we are traders, we trade the buy system, we follow the key. So today the opening price is below the pivot one, but now it's trading above OP. So above OP, above pivot one is a buy time. Okay. The only thing that's going against us now is the KSI happen to be red in color. So the buyers will be there. So if the market goes up to KTR +1 to +3, please watch out for profit taking. Okay, there might be profit taking. Now, if short sellers, you really want to sell, you also must wait for it to go to KTR +1 to +3. Then you can consider to sell if you really insist to short sell in the market. But I say once again, when the market is above OP and above pivot one, please do not go into to sell the market right now. It's going to be dangerous, okay? Because we have seen this many times. But unless the market goes below OP, that's it. If the market goes below OP, then the selling can bring it down all the way to 30,784. So you can see my view is very clear. If the market stays above OP, we should see higher movement. It may go to 31,200, 250, 300. But if the Dow Jones go below the opening price, then I can very tell you that the chance of 30,784 is going to be very high possibility. Okay, guys? So hopefully you heard me loud and clear on this. Okay, this is very important. All right, hope you can understand this. Remember this, above OP or P1, never short the market. Okay, all right, cool. So NASDAQ wise, you can see because of the yield, the NASDAQ gap up. So it's pretty clear that, the yield has a very big impact towards the, have a very great impact with the NASDAQ. So the NASDAQ gap up is expected. So that is what's happening right now. The MLP of today is here. So it's a big gap up. So same thing again, if the market stays above OP, no problem. If the market breaks below OP, the gap could be traded, the gap. So traders, just watch out for this. This is a gap here. Okay, there's a gap here. So if the market stays above it, that is fine. If the gap market comes down, traders, just be careful, okay? All right, this is the longer term chart. I mean, this is the BMB. So that's why the market was supported, very strongly supported by the SL. You can see the BMB, then supported by SL. Very powerful system that we have, okay? Very powerful. All right, so that will be the equity markets. Let's look at the Hang Seng one more time because you guys love Hang Seng so much. I'm going to talk about Hang Seng again. But before that, I give you DAX first, okay? I promise people to do DAX on a regular basis. I'll do DAX. Now for DAX, you can see on Friday, two things happen. First of all, you can see on the DAX side, let me just change the color. All right, the DAX basically created a BMB. And of course, same thing, when the market went back above the BMB support level, DAX went up. So the DAX BMB support level is going to be very important. So watch out for that. That number itself is 13,744. So as long as the DAX stays above 13,744, there should be no concern for that. Okay, the downside, it seems that there is a strong, and you saw the bond market, the yields went up, right? So that is probably the manipulation involved. For the MA30 is about 13,922. The closing on Friday is 13,786. So I suspect that later on the DAX will open somewhere around here. I suspect that later DAX will open somewhere near the MLP. So if that happens itself, right, if the market stays above MLP, the market will go higher. If the market stays below MLP, there could be some profit taking. So traders on DAX, watch out for that. Now, actually, DAX is a very good market, very consistent, the first 2 hours follow through the market very well. So actually, DAX traders or traders who want to trade in the evening session about 3 p.m. onwards, right, 3 to 5 is a very good time to trade, okay? So watch out for DAX. I will see later on, do I have time to do a DAX live trading? I will try, okay? I will see my time. But today, This week is the Triple T trainee last week training, and we're putting a lot of effort into this, and we want them to do very well. All right, this time on the second batch seemingly have a pretty good chance to have more SP coming on board. We will see how it goes. Okay. All right, so that is DEX for you. Okay. Gold. Now, gold basically, as I mentioned to you again and again and again and again, gold is coming off a little bit because of the yield, all right? But of course, when the yield pulls back, the gold price went up a little bit. So what Seng saying now, right? Now, apparently, right, people are now buying gold. Yesterday, I was around Tampines area. I was seeing that people were holding around to buy gold, all right? And then after that, I went to which part of the world? Oh, where did I go next one? Shit, I can't remember. Another shopping mall. Basically, I saw again people was all buying gold. So it seemed that right, the lower gold prices itself does spark in fury in buying. But I have seen this before when the gold is somewhere in the middle or lower, people buy gold. But later on, when the gold price go even lower, right, then that is where people get worried and throw gold at a lower level. It's something that we've seen this before. So whether it's a major breakdown or going to be a buying opportunity, to me itself, right, as long as the equity market is holding, the whatever gold price now at this moment is still a little bit too early to call. And I'm still saying the same thing again. If the equity market stays up, the gold price will be up for time being. But if the equity market goes down, then the gold price will come down. So let's look back what happened on Friday. When the gold price opened between the pivot 1 and pivot 2, I told you guys gold should be okay. All right. If it goes up, watch out for KTR +1 to +3 because the KSI happened to be red in color. It's biased against the sell side. So if the market breaks below OP and is below pivot 2, then that's it. There's nothing to talk already. You will sell, right? And indeed, look at it. The same thing what happened in the, sorry, my bad, that's not the P2. Sorry. The 1762. 1762 is the 15% marker, right? I told you it's a market break 1762, gold will come down. And when it break the pivot 2 at 1750, that is where I told you guys that gold will come down stronger. And indeed, it purposely come down to the KCB level of 1722 before staging a rebound. So guys, this is really very important. If you once you know our system, the difference is a lot of traders, when they see the price come down, they will look to buy. But for us itself, right, if we know that the market is, KSI is red and is below pivot 2, we'll keep on harpering, we will stick on selling the market based on CCYR. So this is a very different camps here, you see. Normal camp will go into buy and we will sell. But again, if the market now is not trading below P2, right, we will actually be buying. That all depends on the KSI reading at that moment. So it's very important to actually, have the system. That's the reason why our traders are making money. You can see why we have some traders are doing so well, because they really realize that there's a big discrepancy between our system and the conventional system. So if you look at it, my friends, look at it. If you focus what I tell you guys, once the market loses the 1762 level and you look at all the CCYRs, you can see that the gold price come down. And of course, once the market goes below the P2, that's it. Now, a lot of traditional traders, right, I saw on the forums, when the gold price broke down to 1730, 1720, they kept buying until the market went down to 1720. They cut their position right there. Oh my God. They really cut their position here. And that is whereby, based on our rule, right, the market hit the KCB at 1722, you should be buying into gold instead, or at least, buy back your shorts, okay? Buy back your shorts. And if you have done that now, I think gold is higher, right? 1740 right now. So it benefits. You see, you really need to have the system rather than you just randomly guess up or guess the market and then try your best to think what you can do with gold. So this is why the system is really very important. So traders, please take advantage of this and benefit out of it, okay? So this is very, very important. All right, so let's look at gold right now. Okay, Dow is trading higher now, 31,176. As I mentioned to you many times again, if the Dow Jones is trading above pivot 1, don't go for short, okay? Just wait for a while, guys. Wait for a turn, okay? Just make sure you do that, okay? Gold is also trading higher now. Let's take a look at gold long-term price. Okay, this is gold. Now, gold, obviously, the chart had to move a little bit downwards because it's trading downwards, okay? I cannot change it. Okay, so gold right now, the MLP for today, let me just bring it in. The MLP for gold itself is about 1754 region. Okay, we have a very strong support at 1722. We saw that just now already. So for the MA30 on gold is about 1803, 1803. So it is still below the MA30, right? But as long as the market is above the opening price for the time being, right, do not do anything to gold, because gold may stage an intermittent rebound. Right, the MLP, as I mentioned to you, is a 1754 region. So as long as the market stay above the 1754 region, right, or it may go towards that, the MLP to touch it first. So traders, watch out for that. Okay. Long haul, where will go? Of course, you guys will know my answer very clearly, because I'm a guy who follow my numbers. So as long as gold stays down, I do suspect that gold might be coming down to this point first. I say this again. That is a 61.8 for the Fibonacci, and that's 1689. Now, of course, some of you send me charts and say that my Fibo is wrong because you use another figure. Now, that is the problem with Fibonacci, is that it's where you put your low and your high, then of course the mathematics will change accordingly. So if your low and my low is different, even though we share the same high, obviously this high is not the historical high is here, then of course your Fibonacci and my Fibonacci is going to be different, okay? So please don't compare apple and orange. It doesn't make sense. Although we may be fruits, but doesn't mean that we are the same, okay? So my number is 1689, but the mathematic number is 1660, right? I still believe that if gold stays below OP the coming days and weeks, and if gold breaks below 1689, then I'll be watching gold at 1660. Now, if gold ever come to 1660, will be a great time to buy gold. Well, I think it'll be a very good time to buy some gold, because that is a 20% level. And so on this tomorrow during the Super Tuesday, I will come back to you about how to play the 20 percentile level. It is actually a very powerful way to play gold if you actually know how to do that. All right. So tomorrow, Super Tuesday, will be a very, very big and important session. So guys, come on board, and come on board on this, okay? And listen to me what I share with you on Super Tuesday. Silver, I told you guys, silver and gold, they are related. As long as silver, with gold coming down, silver will be coming down. So we saw now gold recovering, silver also recover. So silver at the moment now, the MA30 is $27.13. So now it's trading at about $26.83. So silver price is still on the downside, okay, overall, but the silver chart looks much better. The silver chart looks much, much better than gold chart. So I cannot deny this. If ever gold come down and silver come down, but the overall trend is still like the silver looks better, then when gold starts to go up, right, you should buy more towards silver. Then the time silver price will really shoot up. So you heard me, huh? I'm saying that now gold and silver are still moving in tandem, but silver chart looks better than gold chart. So when the gold plunge, silver will also come down, okay? Right? But then again, when the market for gold start to stabilize and recover later on, because of whatever reason, maybe inflation, maybe is moving of funds towards gold, or, because dollar have depreciated a lot, then silver will shoot up faster than gold. Okay, so I put it on record already. You heard me loud and clear on this, okay? All right, very important information for you, okay? Okay, so that's silver, and let's just cover gold to wrap it up. Now, gold this morning also looks like Dow Jones is trading above the opening price and above pivot 1. So as long as gold stays above the pivot 1, gold should be going higher because it's now above pivot 1. Pivot 1 is at 1735, and now gold is higher. So gold is higher. Does it mean that we can buy gold? Well, you should be buying gold when the market broke with pivot 1, right? You shouldn't have waited. So as long as gold stays above the pivot 1735, gold could go higher. Now gold, there is a MLP somewhere around here, so it's about 17 plus. Let me just take a look. Okay, on okay, MLP for gold is about 1752, right? 1752 region. Earlier we say already, okay? About 1752. So as long as gold stays above OP, above pivot 1, no problem. Gold will be going higher. But if gold breaks below OP, then careful, right? If gold break below pivot 1, 1722 will be revisited again. I repeat myself. If the market breaks below pivot 1735, gold will revisit 1722 again. Okay, you heard me loud and clear. I hope that this is good enough for you. Okay. All right, now Bitcoin, right? Bitcoin. Last Friday we have a pretty bad week. Last Thursday, a pretty bad day. But then again, yesterday Sunday, Bitcoin do very well for us. 4 wins or 4 trades once again. All right. Now single tick means $300 gain. 2 tick is about $500 gain, and triple tick is about $800 and more. Now I have some good news for all the TWB students. Over on Saturday, I have a meeting with the AIMS management. I did talk to them and ask them about the Bitcoin, the spreads and stuff. And they are now looking now to find another great party to join in an exchange, probably to come on board to help to lower down the spread. So give a bit more time. All right. I know that you are in a big hurry to make a lot of money from Bitcoin, but give some time. About 2 weeks or so, we could see some fresh new spreads around for Bitcoin. And if that happens, it's all right. The numbers can be very good and it will be very instrumental for us to trade. And of course, during this time, it's all right. I will also be working out the e-learning portal for cryptocurrency and a bit of blockchain so that you guys can come on board to learn also, all right? So this is something is all the benefit to all of you. So let's us see whether we can get something out of this. So let's look at Bitcoin, a quick one on Bitcoin right now. On my personal take on Bitcoin. Now today, Bitcoin is interesting because of the picture of this. Bitcoin today, the opening price is also above pivot 1. So as long as Bitcoin stays above OP, Bitcoin should be going higher. All right, so Bitcoin could have some form of, could go towards 47,500 region. Okay, that is the Bitcoin potential upside target. But the thing is this, we also see that there is a very important KCB level at 44,980. And you can see that this KCB has basically supported the market for 4 times, including today. So as long as the market stays above the KCB, all right, it's fine. If the market break below 44,980, then there could be some selling on the this Bitcoin. At the moment now, the KSI is red in color and there's blue bar extended already. So all these are not very good sign to inform you that it could be some profit taking further. Now, one thing scary is this particular KCB point, this chocolate bar. Now, this chocolate bar, if you look at it, right, it's quite a big bar down, and that is about 38,400. Okay, so my personal view is this: if later on, if the market really breaks below 44,000, there could be a free fall to 38,500. Now, if the market do come to 38,500, then traders may want to take a look at that level. Okay, I repeat myself one more time, putting myself on a chopping board. If the Bitcoin do break below 44,980 and trade lower, okay, I'm going to put in recording right now. I say this again. Now, if Bitcoin basically can stay above 44,980, Bitcoin will still be okay relatively. But if the Bitcoin goes below 44,980 and goes below it, all right, with the KSI rate and the blue bar extending downwards, right, there is a chance to see Bitcoin coming down to 38,500 level. Okay, there is a chance for the Bitcoin to travel down to 38,500. Now, if that happens itself, we're talking about nearly $20,000 off the high, and that usually will cause some panic in the market. And definitely, you will see a lot of media coming and say, "Yay, see, this is what you shouldn't be doing" and stuff. And of course, usually that is where probably a good buying opportunity could happen. All right, I'll cover more story once we go down there at 38,500 level. Okay, watch out for that. Okay, so that is Bitcoin, and I've done my duties for today. All right, it's 9:38 already. I need to rush to the doctor. All right, guys. All right, the special charts is very clear. This is the commodity chart right now. And you can see that whenever commodity prices go up, you can generally see inflation also goes up at the same time. These come from Crescat Capital. You can go Google on them. They have a very good website. Of course, they are a bit biased, but then again, you can watch this out, okay? And you can see that usually commodity prices and inflation expectation always move in tandem. And recently, the price of plywood and lumber have went up really rocket high because a lot of people are moving away from the city. And that's the reason why traders are saying that this could be very a clear sign that the commodity market and the economy is doing well, so-called, and that causes this to go higher. But if you look at this, their own model by Crescat Capital, they have this model whereby their own model. It is an award-winning global market asset management. Okay, so they say that this model, whenever hit 100%, right, for some reason the market will be at a peak. So based on their own numbers, they are also saying that now their current numbers is also at a peak. So if you believe that this market valuation model is correct, then probably you know that this could bring some form of selling in the market. But again, this company itself is not that big as compared to other countries, other fund size. So I cannot say whether they are good or bad. You do your own research on them. Okay, my job is just to bring you what I see that could be a concerning factor. Just take as a form of protection. And of course, now on Friday, the fear grid was at 52 because of the Friday sell-off. The market is 48. So we are getting nearer to below 50 mark. And of course, if the market ever drive down to the extreme fear factor down there, again, that will be a lovely time to consider buying back some of your shorts. At the moment now, it's neither here or there. So traders, you do your own call, you make a decision, and you see whether or not do you want to believe what you're seeing, okay? So end of the day, guys, this is all the stuff that I have done for you. Again, it took me a few hours to do this. I hope you appreciate that. Thanks again. Once again, this is the end of today's MAO. I'll see you again, and may you strike gold and make a lot of money this week and beyond. All right. Once again, Susan, happy birthday to you. Great. Take care. See you later at 11:30 a.m. That's for Susan only. Bye-bye.